Most video you see online about trading is not actual about trading. It's about lifestyle, it's about flex, Lamborghinis, about trading courses and signals. But this video is not about that. We are just in Miami with one of our two most successful traders. This is David and this is Nicholas. And today I will show you how the successful trader routine looks like. We will go through the trading strategies, setup, risk management, and everything you need to know to become a successful trader. Okay, Nicholas, so my first question is that what would make no trade day today for you?
For today, I will be looking if there's some red folder news from the US, mainly FOMC, CPY, PPY. If we got that type of volatility, I'm not interested. And second of all, if my personal life is too busy, then I will not be able to focus on the chart. So I would rather just stay away from trading.
But for example, many of our traders are asking if they can trade news events and they are looking for news events. And why are you not trading during the news events?
Well, mainly because these traders are mostly scalpers and intraday traders looking for that type of volatility. From my side, I'm a swing trader, so I try to avoid those type of events to avoid false signals, essentially.
Okay, and what possibly can happen if you will trade during the news event?
Well, what it mostly happened, according to my back testing, is that these false signals will eventually decrease my win rate instead of just waiting until the news event has passed and look for the direction on the market.
Okay, so you are waiting until the news event will pass and then you are going into the trade?
Yes, correct.
Okay, and my second question is like, what is your maximum daily drawdown and stop loss, and what happens when you hit it?
All right, so for my personal trading, I normally go between around 3% and 2%, but for prop firms alone, I do between 0.5% and 1% according to the amount of positions I'm running at that time.
Okay, and what you can tell the traders about big daily drawdowns and big stop losses?
To be honest, you can avoid losses, but what you can do is cut your losses short. So that's the main thing about trading. So essentially what you can do is set some rules that are going to avoid from over trading, and you stop doing this kind of big drawdowns because you are putting a lot of effort on those profits and you can erase that in a single trade.
Okay, and what rules do you use for over trading and for your risk management?
Well, I mostly, stay legit into my 1%, 2% or 3% rules. And essentially, I remember back then when I was started trading that I used to disrespect these rules. But nowadays, since I'm profitable now, and the reason I'm profitable is because essentially I'm respecting that. So I always remember that there's always a new day, there's always a new trade, and I try to stay out of the market. So as soon as I get that threshold, then essentially I just start doing some other stuff.
Okay, and do you somehow check your emotional state before starting trading or before starting placing your first trade?
Well, actually, yes. A couple years ago, I started journaling on my emotional stage as well, not only from the trading perspective. It didn't work out for me on a journal perspective, but what it does work out for me is that I do have a routine before trading. So what I do is I normally go for a run or for a walk with my dog or alone, like about 30 minutes. Then I come home and essentially I do some meditation to quick start the day without the market. And then I will sit into the markets and do more relaxed kind of job.
And what happens, for example, when you have some argument with your girlfriend or you are pissed off of someone, and what happens then? You are trading or you are trying to meditate, or because that's happening in life. Yeah. Let's be honest, like some shit happens.
Yeah, totally. And that's why like at the beginning of the interview, I told you that when my personal life is too busy, I'm avoiding charts at all moments, because as you said, when I have fight with my girlfriend, when I have fight with my family, when shit happens overall, you will not be 100% focused on what's actually happening in the markets. So I will try to avoid it. But, sometimes we are all humans, so essentially I normally try to avoid it, but there are times in which I'm also trading when shit is happening around me.
Okay, and what's the one mistake you are trying to avoid in trading?
I would say that go outside my trading rules. I have realized that trading needs to be a super systematic game, that you are not into this game to just speculate on the price of an asset and say like, oh, I think this is going up or this is going down, but rather if take your feelings away, take your thoughts away, just follow the structure of your trading plan at all costs. So essentially the one mistake that I'm trying to avoid always is to try to open trades that are outside of my trading plan.
What all is included within your trading plan?
So essentially I would say the first one would be my daily routine. So like I said, running and meditation first. If I didn't go through them, it's most likely that I'm going to make a mistake on the chart. So first, like let's say first checklist. Then second checklist, scan the market. I go through some tools like CoinGlass, for example, for scanning the crypto market with open interest. I choose the coins that are with the highest open interest for the day or for the week, and I start doing some analysis on them. If I see some good setups, then I will start looking for the entries, because since I'm a swing trader, I can have, let's say, 1, maximum 2 entries a week. So I need to wait for them and plan the trade. That's essentially something super important for people, is you need to plan the trade. You don't go ahead and open the charts and go like, okay, I'm going to buy. No, you plan the trade and you wait for the execution. And essentially then as soon as I plan the trade, I will just set some alerts on TradingView and on my other platforms. And as soon as I get the alerts, then I will just open the trade, because as soon as you open the trade, there's nothing else you can do. You need to accept the risk. As soon as you accept the risk, then you start doing the trade management depending on your rules. I normally just let the trade run, and because in swing trading perspective, you can have big swings that can make your trade last even months sometimes.
And how you protect yourselves from those swings? Because, for example, some prop firms have those trailing drawdowns, which can basically fail your account.
Well, that's why I'm trading with Higher Trader, because essentially we have the swing drawdown. So I purchased that on my challenge, and now I'm able to handle those drawdowns better than just with other platforms that don't have that.
If the beginner trader would copy your setup and trades today, would lose money or earn money?
Right now, I'm currently only on one long position in Sol. I think the people that follow that setup that I shared on my private group are right now earning money. But in my personal opinion, I would say you should never look out to keep copying trades from other traders, because the most essential thing is you get education and you build your own strategies based upon your thoughts. And the trading is literally an infinite world of possibilities. So my strategy is not the only one that is going to be profitable.
Okay, so maybe let's talk about more your trading strategy. You are a pretty successful trader. You are trading on Hero Trader accounts. You made a lot of payouts in there. You are trading also on your own accounts, helping your community to grow, and you are teaching them your trading strategy. So maybe explain more, like how it works, what are you doing, and how people can apply those strategies to their strategy, or how they can learn from that.
Essentially, the first thing I normally do is I go into CoinGlass. In CoinGlass, I have some filters set up according to market cap. So I'm not really interested in trading any coin that is outside of $100 million market cap. Below that is not interesting for me. So anything that's above is already filtered. And as we can see here, Sol on the previous 7 days, it has one of the highest open interest changes. So what I essentially do is I go through these, at least the first 5 or the first 10 assets, and then I go to TradingView. As soon as I am on TradingView, I will start with the weekly chart, which is the most important chart for me for the long-term trend, for the primary trend that I'm looking for. So according to the trend that I'm showcasing and highlighting over here, we can clearly see how the sol is currently running between these two high volume nodes that are showcasing some sort of range formation around here. But overall, we can clearly see that with this lower high formation and this lower low formation, and how the market is actually rejecting the previous lower low zone. So as soon as I get this is, all right, the trend is bearish right now. We have lower high, lower low. So that showcases a bearish trend, right? But what's the difference with trend and momentum? So the momentum shifted on sol right now because essentially we have a rejection from the low. So it's only going to be detrimental for me if I go against the momentum on the weekly chart. So this chart is showcasing me that I need to look for long trade positions instead of short trade positions, right? So as soon as I have that trend on the weekly chart pretty quick, like I'm not overcomplicating stuff, I'm using volume profile and I'm using my proprietary trend system over here. But after that, then I will go just essentially into the daily chart. So the daily chart is also showcasing a bearish trend. Like as we can see here in this high volume node, we have this range formation with this lower high, lower low at the lows. And what we can clearly see here is a shift in momentum as well. So we have two failed auctions at the low that we can showcase on the chart. And these two failed auction is literally telling me that the market is more likely to move towards the range highs, just as what happened over here. We saw the rejections at the top, and what the market did is essentially move into the range lows and rejected it. So I'm looking for the same scenario here. Now in here I will mix a bit of volume footprint charts because I want to see what was the behavior for sol during these failed auctions, and I want to see what was the behavior from tradings during these failed auctions. So as we can see clearly here, at least on this candle over here, all of these purple volume lines are showcasing that all traders that participated on the market at that moment were shorting the market. So all of these short positions are now trapped, meaning that they are out of the market right now. And essentially what I aiming to do is look out for absorption divergences like this one over here. So we have trap traders on the other order flow here, and also in this rejection over here we have trap traders showcasing that there's a lot of bearish volume building at the low of the range, and that's what I'm looking for. Like essentially trap traders showcasing that the trend is not continued on their desired direction, so the market essentially will just move the other way. Okay, so as soon as I have confirmation for this, I will just go to the 4-hour chart. The daily chart also needs to showcase some sort of high volume moves around here, around this movement. So we can clearly see how this candle over here showcased high volume on this candle over here, high volume over here. So we can clearly see how this movement was most likely going to get reversed, as these high relative volume candles often showcases bottoms and tops. So as soon as I got this, I will get essentially into the 4-hour chart. In my case, I was late to this trade alone because the trade should have been taken around these levels. We can clearly see that the market structure got broken around here. So as soon as we got this lower low for the 4-hour chart, we have this lower high for the 4-hour chart. Essentially now we know that these failed auctions were successful on the daily chart, and here with 1, 2, and 3 and 4 candles breaking outside of this range, this is where I should have placed the trade, right? But it doesn't really matter to me because I'm just following the trend to the upside of the range formation. So essentially what I'm targeting right now is this weekly level over here around 155.7, and with my first target around $142 on the daily chart. So right now the trend on the 4-hour is pretty clearly breaking out. It made another failed auction at the lows of this range formation, rejection, and essentially what I'm just doing is I'm just following the trend and following the momentum on the higher time frames. So that's kind of my strategy in a nutshell. It seems to be pretty simplistic. It is. I try to be as simple as possible, but you need to understand concepts like order flow, action market theory, price action. You need to have your own trend system to identify in which direction you are trading and all that. So that's what I built for myself with all of the knowledge that I have acquired over the years. And it's making good results. As you can see here, the trade is running well, and for the people that essentially just follow with the trade setup, they are running in good profit, and most likely we are going to just keep following the trend until the target is hit.
Over the past year, they generated more than 100,000 in profits. But they do not generate that profit from selling courses, membership or trading content. It's mostly waiting, restraint and boredom. But this is what actually trading looks like. Okay guys, now we finished with Nicolas, but we will continue later, don't worry. Now we are going for David. Let's go with me. Hey David.
Hey, how's it going, Sam?
Hey.
Good to see you. Come in.
Okay, so now I talk with Nicolas. I'm here with David. David is professional trader, started with Forex, trading also Forex, but also crypto. And I will ask him the same questions as Nicolas, because I think these are the important questions. And let's go for it. So David, what would make today no day trade for you?
It would basically be if the market is already overextended, right? So sometimes it happens that you miss the move and it moves a lot, like, you know, Bitcoin makes a 5%, then I'm really not trying to FOMO into the markets. Or if there is some like a big announcement from the Trump or FOMC, NFP or inflation data coming out, this is what mostly keeps me out, and I rather preserve my capital and also the emotional capital, so not to spend it and not to be frustrated in the markets when there is really not good conditions for the trading.
Okay, and my second question is like, what is your daily maximum loss and what happens if you hit it?
Okay, so I have two values on the personal accounts and on the prop accounts, right? On the personal accounts, it's like a 3%, right? Because I'm risking 1.5% per trade. So if I lose 2 trades, I basically stop trading, right? And on the prop accounts, it is a 0.5% per trade. And again, I'm not taking more than 2 trades at the time, right? So it's a 1% and then I stop the trading, right? Also, I'm not trading every day, even though my trades are sometimes like a day trades, but day trading doesn't mean trading every day, right? So looking for specific situations, and especially thanks to the Hiro, I realized that trading less is more, right? Because trading many instruments from Forex, crypto, indices and these stuffs, right? And since I started prop trading with the Hiro and started really trade the crypto, not only investing as it was before, I was really trading it less and was waiting just for the best situations. And then I realized that if I started doing the same approach on my personal accounts, I actually would be doing less trading with the less stress, but more profits. Right? So yeah, I keep it strict, like 2 losses in a day, and then I'm done if that happens.
Okay, and my question is, how do you check your emotional state before entering the trade or starting the trading day?
Basically, I'm doing this. It's a as you be smiling to as you be smiling to me that I'm always using a pen and paper. That's what I'm always doing, right? So I start the day and I write a manual journal, like how I'm feeling, what I'm doing, right, and trying to analyze myself. And if there's really something which is making me feel uncomfortable or something like that, I don't trade, right? Also, what helps me a lot with the emotional stuff and these things is doing the meditation, right? Trying to focus on myself, or going for the walks without the phone, right? And trying to being present, especially not to be in some rush, as you know, I have also my community, and sometimes it's a little bit a force, to produce the trades, to post something, right? I used to do it in the past, but right now, when there is no setup, I'm not forcing anything, and I don't feel emotionally somehow in a pressure, to prove something or something like that, right? So yeah, I would say meditation, reading, trying to be present, and these stuff, right? But sometimes, of course, you cannot control it, especially when you have a kids and ex-wife. It can sometimes drive you crazy.
And what's the one mistake you are trying to avoid today?
Okay, so I think that I have my strategy perfectly described, but still, I'm human, and sometimes I make a mistakes, right? So what I'm basically doing is, for example, sometimes I miss something in an analysis, or I trade counter trend, or basically I don't wait for the confirmation on the level, I enter earlier, right? And these are still things which are repeating time to time, and what I'm basically doing is I'm writing them down, I'm putting them into my journal, and every day before the trading I read my recent mistakes, right? So right now I have like 5 things in there from the previous year. And
so this is like mistakes for a year or for a week or
no,
for a month?
it's basically I keep that mistake in there until I repeat it, right? So let's say if yesterday or maybe recently I did some mistake, I traded a counter trend, which I shouldn't, right? And it was the loss, then I just don't continue trading, right? I always do the analysis of that loss, and I write down what was wrong, and if there was any mistakes, I put it in here, right? So that when I'm taking a next trade, I read it what was my recent mistakes, right? And when I read it, I basically focus on not repeating it, right? And once I stop to repeating it, I delete it, or I maybe fill the different mistake, right? So currently I have like 5 mistakes which I did somehow recently, and this is how I'm trying to avoid them, right?
If some trader copied your setup and your screen today, he would lose money or earn money?
Yeah, I think he would definitely earn money, because we had the stream today in my community, and everyone is in profit right now. So we catch some good trades, and yeah, I mean, yeah, it would be in a profit, let's say it this way.
Let's dive more into your trading strategy, so you can showcase our traders how your strategy looks like, if they can possibly learn something from your strategy, and yeah, that would be interesting.
Okay, so the most important thing is basically to finding where is the liquidity, right? So I'm always looking for a candle closes. So if you look at this, and these are basically a daily candles, right? So I'm looking where the daily candle has been closing, then the previous day, right? Then I'm looking another candle closing, and if it has closed above the previous day's high, right, then the liquidity is here on the top. So I'm basically expecting the price to continue higher, right? That's enough for me to make money, right? This is how I'm looking for a continuation setup, which I will show you today. There is also a reversal setup, but there has to be a little bit different. So we have basically the candle close, and then that high has to be taken, and then the liquidity appears in here, and I'm trading short. Now I will take you here into my journal, where I have everything described on this graph, right? So as I shown you right now, these 2 candles which are closing, right? So you can imagine them like here. So you have the one candle and then another candle, right? Inside this yellow drawings, this is a lower time frame, right? So if these are daily candles, and this high of this daily candle still wasn't taken, I mean, when the price basically didn't go above it, then I'm suspecting that liquidity is above these highs, and that the price will still continue higher, right? So in that moment, I'm basically doing this. I'm waiting for price to do a correction, to pull back, right? And I'm measuring in here the low and high, right? And I'm dividing that into a 50%, which basically giving me a premium and the discount prices, right? And I want to be taking my setup below this 50% pullback. Also, what I want to see is on the higher time frame, as we had these daily candles before highlighted, I want to see a big down candle, right? Manipulation candle. I mean, the candle which is taking us down. I call it CLS candle because in my thesis there is a CLS operator which is moving the market, and these are the ones who can create such a candle. And if they create such a candle and price starts to move lower like this, right? Then I draw a range on that candle, which would be this range which we have in here, right? So I got my range, and the thesis is that basically as the price has moved sharply lower, the theory is basically as the price has moved sharply lower, right, and then it starts to break lower again, here is where the retail traders are entering. Why? Because they see the price sharply moving lower, right, and then they see another breakout. So they expecting the price continue lower, but if these highs wasn't taken, right, that's mostly where the liquidity is, right? So I'm waiting for them to enter the market, right? And here also it needs to break some kind of low, right, which is another liquidity. And then once the price move back inside the range, I'm basically entering with the stop loss down here, because if the traders has entered somewhere in here, they entered the short side expecting the price to continue lower, they will most likely put stop losses above or in the 50% of this range, or some liquidity in here, which would be some kind of highs, right? And I'm targeting this in a 50%, right? And that's my opportunity, right? Because they basically shorted kind of a potential reversal, and also we can see in here would be a trend line, right? So we have actually uptrend with the liquidity still above here, right? And they start to think, okay, trend line break, let's short it, right? And then another day break, let's short it, right? So there was two signals for them to short it, and then I'm basically trading against them, right? And that's basically it. And I'm looking for a one trade, targeting a 50% of that range, and then if I get a pullback, right, onto Fibonacci, because I'm measuring Fibo from here to here, it gives me this zone, right, and then I'm trading again continuation. So it gives me mostly two opportunities, and that's basically the one setup which is, I would say, the most easiest one, and that's the one which I won the scalping competition with it. So it's easy, I would say, but there is a lot of things which you need to get under your skin, right? Mm-hmm. So in here I have mentioned the mistakes which I did recently, right? So basically it was let's say here trading with the wrong market context. Yes, mm-hmm. I basically been trading. It was on some forex pair, and I was basically shorting something. I think it was probably here, right? So yeah, here was a long trade, but if I remember well, I was kind of shorting in here, right? Something like that. But if you look here, you have basically that range in here. You had the manipulation in here, so traders has been entering here, price reached 50%, then it made pullback, and then we are targeting this high, right? Mm-hmm. And I've been shorting in here before this liquidity has been reached, right? So yeah, you see, sometimes I make also mistakes, right?
Okay, thank you. It was useful. We will take a short break and then we will continue. What you just saw is not entertainment trading. This doesn't look good on camera, but this is the type of process which will survive over time. Most of the people focus on outcomes, cars, profits, screens, but none of this matters if the process breaks. So David, what do you think? Like, what part of trading people completely underestimate?
Yeah, it's definitely importance of having a statistical data of your strategy, because if you don't have this statistical data backtested, or probably somehow hindsight backtested, or journaled on, let's say, 100 or 200 trades, you don't know your statistical data. You don't know how what is your probability, what is your average winning ratio, what is best risk reward ratio for your trades, right? And if you don't have this data on the large data sample, then it leads you to trying to gamble, right? People gambling big positions because they don't know, they don't have the statistical data, and they don't know that they basically can lose, let's say, 40% of the trades, right? If you have the statistical data and you know that you win, let's say, 60-70% of the trades, there still could be 30% of the losses. So why would you then gamble if you know that there still can be some percentage of the losses, right? And same thing, it's with the greed. If you have the statistical data and you know that your high probability winning setup is, let's say, 1 to 2 risk rewards, why would you then open a trade and set up some unrealistic target and hoping to pass your prop challenge or make some big payout, right? If you have this statistical data, you know what is the best type of the trade, how it should look like, and you simply stick into it, and you going brick by brick, and you simply building it one by one, right? And you simply trading like a machine, not trying to do some sensational home runs and these nonsense, right?
From my perspective, I think it's discipline and consistency, because everyone gets into the space thinking like they will get just like 1 or 2 hours into the markets and then they will just move and live their lives like all of these Instagrammers are showing, but I don't think it's actually possible, because you know the markets are 24/7, at least crypto is, and you need to keep your head on the game every single time, every single day. So the discipline of staying on the charts, following your strategy, it's even harder, in my opinion, than actually learning technical analysis, because technical analysis is just a skill, but then you need the skill of mastering yourself to go against your human nature.
Okay, and what do you think that usually ends a trader's career?
I would say it's definitely unrealistic expectations, right? People coming to the trading, seeing the people on the Instagram, which are showing their showcase, but they're not showing the back end, right? What is behind it, right? I'm not saying that these people cannot trade, but they're mostly showing just what they want you to see, right? You don't see the reality. And the people think that this is how the real trading is, and that it could look easy, right? So that would be definitely one thing. And the second thing I would say, it's not committing enough to one strategy, right? Because every strategy has some pro and some cons, right? Some strategies are working in a trend, some strategies working in the sideways, some of them are created for the reversals. And this is what people mostly don't realize, and they still try to apply one strategy to every market conditions, and you don't know what's gonna be next 3 months, right? Like you can look to the Bitcoin, sometimes it's ranging for a month, nothing is happening, and when you have a trending strategy, you will be really frustrated, right? So what people tend to do in these situations, they basically find out, okay, strategy is not working, let's find different one, right? And then the market change again, right? And then again, and they are in these doom loop when it's still repeating, and so they're basically jumping from a strategy to strategy, trying to fit it into the market conditions, which are constantly changing. And I would say that every trader has a lifetime, let's say 4 to 5 maximum years, and if they don't get profitable in this period, they basically give up.
Over the past 7 to 8 years that I have been trading, I have thought about leaving trading several times. You know, like there was times that I was so involved in it, and you know, losing money, losing accounts and all that. Even I remember one time I was crying on my couch after a trading session, like this is not for me, and you are always overthinking that you are not getting the results. So I think that is the time that actually is going to build your career or destroy your career as a trader. So if you stop from there, then I'm pretty sure you are less likely to come back. But if you move on from that specific mind state that you are involved at that moment, then I would say that you are more likely to make it in the space.
What you saw today wasn't a perfect trading day, but it was the controlled one. That's the difference between trading that survives and between trading that disappears. In the end, capital is not chased, but it's allocated, and this is how the real trading looks like. David and Nicolas here will also start doing weekly live streams for the community. This will be not trade calls and this will be not trading signals. These streams exist to show the process, including the days where nothing happens.